and exit. But the most important thing is the strategy has to make sense fundamentally. So if it doesn't make sense, if it's just a pure technical, you buy when the signal crosses here, you buy when the signal crosses here, it doesn't really make
When you say fundamentally, do you mean as in the fundamentals behind the stock itself, or do you mean in terms of the statistics?
The fundamental
and the psychology.
And on the psychology part, yes.
Okay. Is fundamental something that you look at all? Or do you primarily look at the psychology, the technicals, and the stats?
Primarily look at the psychology, yes.
Incredible. Interesting. And in terms of, if you were to redo your journey, for example, and you had to learn in that 6 months again, because when you started, it was like 10 years ago, maybe the technology had advanced by now to maybe even speed up that process of getting the statistics, for example. But is there anything you would do differently? Is there a process that you would follow now if you were to start from zero?
I'll be honest, in terms of data collections, there's much easier tools to do it. And there's a lot of tools out there that gives you 20 years worth of data.
Wow.
The biggest problem that I found is, especially when you are in this small cap industry, a lot of tickers tends to do lots of reverse split, and lots of dilutions and warrants. If they do that, it's impossible to find the flow on an accurate date in the past, let's say past 5 years. So that is the major problem, because when you want to narrow down the specific market cap and float, and if it's all changed up, you did a reverse split 16 times already, then that's really the big headache. So you want to be live tracking it, and I personally keep all my data starting 10 years ago, manually tracking it, live tracking it on that date, so I know exactly what the flow is. But I still haven't found a tool yet that gives you accurate flow and market cap going back a stock that did a reverse split. Maybe their name has changed.
So it's adjusted for it.
Yeah,
and kept the data from the changes and everything.
Yes, and PriceGate adjusted too, so it's it's a mix.
Makes it much difficult.
Yeah.
So even though there are tools that can help, it's hard to get the accurate data that you actually need.
Yes, and lots of tickers that don't really have the accurate flow at the beginning. Sometimes when we're trading live, there's five sources: Finviz, Bloomberg, and dilution trackers, and they have all different flow. It's horrible.
One thing I heard you say, which was very interesting, was that the small cap market, in terms of volume, I think you said 2020 was like $1 billion, or more maybe. But then the years after that, or a year or two after that, it dropped all the way down to I think like 200 million or something.
Yeah,
is that accurate?
It dropped. So what I understand is, my understanding is, as the Fed keeps printing money, there's more money being distributed to the retails. Very obviously, we saw in 2021, everybody was getting the stimulus check and markets going crazy. And we saw there is a significant slowdown in 2020. So not much money being distributed anymore. And we saw the $1 billion is actually the term that I call dollar block. It means how much money does the retail have to pile into one ticker and forcing the stock to top, because if for the stock to go up another 50%, it needs a lot more money. So the retail doesn't have that kind of money. That's where the retail buying part gets exhausted and stock goes down 50%. So I think it's really related to the market, the overall SPY trend, but if we have a downtrending year, then dollar block tends to slow down, and if we have uptrending year, dollar block tends to go up. So
one thing I found fascinating as well that you mentioned is there's like a cap of how much sort of retail money can be, how many shares can be purchased by retail, and then that's one of your strategies and edges as well when you identify that. Can we expand on that a bit?
How do we identify that?
Yeah, well, how do you identify, and then how are you using that to obviously take your trades and execute accordingly?
Okay, so it's a general method. It's not 100% precise and accurate. For example, let's say the initial market cap for very recent RGTI, the quantum plays. it was 100 million. It went up all the way to $20, and we traded probably around 600, 700 million volume. And the stock tends to stock around 18 to 20-ish. So as you see that the stock is trending up, the market cap grows, and you grow into 1 billion, 2 billion, and when we hit 18, it's slowing down. That means there's more money pouring into the ticker, but the ticker is not having a big reaction because we need, for a $3 billion to go up another 100%, we need another 3 billion. So there's one thing that about a ticker is, if you're a hedge fund, you do not want to buy all of the shares, because once you sell, there's no liquidity. You just gonna end up taking a loss by playing with yourself. Your goal is to take retail's money. That means you cannot take certain percentage of the entire float. So hedge funds gonna be in there, and then the rest of it's retails. So once we hit that specific threshold of retail in terms of on the range of market caps, then stock goes down. So
for you, then it's quite simple to then start looking as a bias for how you can then look to short that stock.
Yes. So for certain market cap, as a beginning, let's say market cap is 10 million. You're a hedge fund. You cannot take 3 million of the market, more than 3 million, because you want to make money and not be able to get stuck with illiquid stocks. So your maximum percentage is 30%. You take that 30%, rest of it is retail. And retail have its limit. Once it hits its ceiling, then it goes down. So
how do you identify, when the retail, the hedge funds and what their positions are versus the retail, so you can do this identification? Or is it more so, as you mentioned earlier, the psychology, you're thinking along these lines?
How do you identify the hedge fund?
Yeah, like when the retail's reaching its limit, so then that short opportunity is starting to present itself. Is there certain tools that you're identifying these things with, or is it, as you mentioned earlier, about the psychology?
It's about the amount of money being placed into a ticker. So let's say the stock goes up 10x, and the stock is trading in a range of maybe 10 to 15, 20, or 15 to 20. And it's been stuck in there for a very long time. So there's amount of volume, use the volume, times the price. That's how much dollar is being traded. There's actually a limit of certain market cap range. Okay. So 10 million to 100 million, there's 600 million. Once it's traded, the stock tends to go down. It doesn't have to necessarily go down, but the stock will likely to lose momentum. So you place your short positions based on once it start to lose its momentum. There's a bunch of exceptions that stock didn't go down, but you will at least slow down that to a point that it will go down maybe 5-10%. In regular cases, 30, 40%. But there's exceptions that maybe they will go down 5%. You won't take a loss, but you will keep yourself very safe.
Don't know where the market's going next? Stop worrying about your trading. Just get informed on exactly what's happening in the markets and what to expect. From Forex to futures to stocks to crypto, be on top of it all. That's why tens of thousands of traders are subscribed to Market Journal, a free newsletter that allows traders to keep up to date with the markets every single week. Remember, an informed trader is a profitable trader. It doesn't matter if Trump tweets, AI stocks are pumping, or if Bitcoin drops out of the sky. Market Journal has you covered. Join for free today using the link in the description below. Let's take a break for a minute there, guys, because I want to tell you about our sponsor, TradeZella. TradeZella is the #1 trading tool for all traders. It doesn't matter whether you're a crypto trader, a futures trader, or a Forex trader, whatever trader you are, all you do is connect your trading platform directly with TradeZella. It automates and makes your trading journaling so easy. If you want to be a profitable trader, you need Trading Edge, and that is exactly what TradeZella does. It allows you to identify edge, maintain your edge, and optimize your edge by automating your trade journaling, in-depth analytics, backtesting, bar replay, and so much more. Now, WOR gets you 20% off your yearly subscription with TradeZella. So use WOR for 20% off your yearly subscription, or RIZ10 for 10% off your monthly subscription. The link is in the description below. Now let's get back to this episode.
But again, like when you've done these scenarios, you've backtested it and you collected the data, so you know what the general result would be, the general sort of movement will be. You also
Correct.
know what, as you mentioned, like sometimes it will do this, like 5-10%, and then it might rebound. But at least then you by doing so, by collecting this data, by doing that work, you can then react accordingly. So it's not really being a shock or surprise. But as you mentioned earlier, a lot of traders unfortunately will just place a position and they don't actually have a target in mind. They don't actually have a plan thereafter.
Yeah. So
Do you feel like the development of a trader, so we talked about using tools now, if someone was going to start today and start to learn, they'd have, yes, the benefits of being able to collect that statistics and the data from past data, with obviously the issue of the flow and the ticker names maybe changing. But when it comes to your alerts, like there's so many different trades available, so many different tickers that are available. Not all of them will be in play at the same time, of course, but how are you going about that process? Is that something you manually do and create a watch list and create what you're looking for maybe the week or the month, or is it something that you have an automated process for?
So it's pretty simple. You're talking about how to select the trades. So basically, I only use tickers that's up 20% for the day, traded about over 1 million shares in the pre-market. The price has to be over $3 or above. Market cap should be under 1 billion initially, and float has to be less than 100 million. That's it. Very
What is it
simple.
about those criterias?
What's it about? Like, what do you mean?
Like why those criterias? Why have you selected those sort of rules for your
Because
selection?
I've tested them and they work the best and they show the best results. So.
And have you still blacklisted biotech stocks, or?
Oh yes.
Still black.
Blacklist. Biotechs. Okay. So I traded biotechs for 10 years. Trading them based on pattern, not about fundamentals. In terms of very heavy technical analysis, every single year I spend so much time trading biotechs. By the end of the year, I'm maybe positive for 1%. So let's say I lose 800k and I made 850k. It's not worth my effort. Every time when you take a loss, it affects my psychology, affects the next trade. It's just not worth it. I was telling many of my students that biotechs, it's the nightmare. Even though when you win it today, you will lose it tomorrow or in the future.
What do you think it is about them? Is there anything in particular, the characteristics?
Their actions are very abnormal. It's not following the regular pattern. The multi-day runners especially, that ticker tends to go from 1 to 100. They don't really take any pullbacks, maybe 10-20% sometimes. And there's some weird ones that stuck in there for 2 months and they just gap another 100%. So it's and eventually they come down, but it's very irrational. People tend to have more will to hold biotechs longer, even though their fundamentals are not there. So,
and in terms of positioning wise, are you primarily a short trader, or do you long as well, or is it half and half? Like what's your sort of outlook?
99% short.
Really?
Yeah.
Is there any reason for that? Is that just a preference?
Shorting has higher winning percentage,
especially in the small caps.
Small caps, especially in the small caps. Higher reward on single day basis. So sometimes you can make up to 70% in one day. Going long, I mean, there's sometimes ticker goes up 1,000%, and how am I supposed to catch that? So, majority is all about higher winning percentage, because going long, I tried statistics for it. The winning percentage is only about 60%. So, 60, 65. If you do really well, maybe 70, but there's no way that you can hit 90%, 95%. So.
Yeah, how you mentioned that you're paying yourself off every profitable trade. At the start of each year, are you starting with the same balance each year, or are you compounding slightly as well?
I compounding slightly as well. So, I think I've reached to the limit of in terms of day trading wise. The most comfortable account equity wise you have for retails, I think it's 300k. Then if you really want to catch all of the reward just on single day trading basis, not multi-day runner like RGTI, single day trading basis, maybe $2 million in equity. That's the max you can do. And
Is that when you start to face liquidity issues?
yes, I'm facing liquidity issues. So the maximum you can sizing on single day single day volume basis is 1.2 million, I believe, 1.2, 1.5. For bigger trades, that you can sizing up to like DJT, RGTI, you can sizing up to billions, maybe 500, a couple hundred million, no problem. But in terms of day trading, 2 million. And I start my equity pretty much flat every single year, day trading 2 million. I have another account for multi-day rounder. That's it. At the very beginning, maybe I keep 50%. So let's say you start with 10K, then if you don't do really well, and you did maybe 100K, then you start with 15. If you do really well, going from 30K into 1 million, then you keep 200K. So it depends on how much you make.
So you'll base it off that, and will you also base it off like how the performance was towards the end of that year, for example?
Yes.
And then, well, the end of last year, if I'm not mistaken, you had an incredible end to the last year.
Oh yes, I had a crazy last 5 months. Yeah, it was $1 million trade back to back. It was started with DJT, of course. So
what do you do in those moments when you're having such a really hot streak? You know, really, really strong P&L, really, really strong trades and strike rates and winning trades back to back. Does anything happen psychologically? Is it something at this point that you're very, very numb to?
I'm a little bit numb to, but when I have a long win streak, I don't really compare to other people of how much I make. I compare to myself. So I have this one calculator that's supposed to be the perfect trader. So what I'm supposed to do, what I'm supposed to make, and is this loss actually necessary? So that sheet that I track is pure based on robotic trading and not emotional trading. So I compare myself at the end of the year or every single month with that sheet. Okay, well, I performed 30% of what I was supposed to make. So I consider to myself, I still have a lot to improve. It's gotten better, but my average performance is about 25-30% compared to the sheet I track. So
it's interesting you say that, because I can imagine a lot of traders may do that exercise with, this is what I could make, or this is what I should make, should I say, if I follow the edge correctly, flawlessly. And instead what they would allow them to do is to create pressure and start chasing that number, because they're seeing this financial number at the end of this performance year, for example. And instead of doing what you're doing, where you're using it as accountability to try and perform your best,
yes,
I can imagine they would allow it to almost push them towards oversizing, push them to try and achieve it as soon as possible, if that makes sense.
Yeah, but the calculator is based on the maximum size, so you can't really push over the size of what I'm supposed to. It's not. I'm not comparing myself based on the money. I'm comparing to myself based on how am I trading in that scenario of executions and sizing. Because let's say the volume is 100 million. You typically don't size in over 10% of the volume. So maximum is 10% of the volume, which 1% of the float. 10% of the float, 1% of the volume. And you don't surpass that limit, and the size is actually the same. So it really I can really compare it to myself with the executions of the perfect execution. Yeah.
Where did you come up with that concept? Is this just something you knew would help you, or you wanted to see what the result should be?
No, I just want to keep my ego down. Because in 2021 I did a really good month. I think in that month I made, of all of the counts, I made $20 million in 1 month.
Really?
And my ego was going way over my head. It was not very good. Because when you make that much money, everybody around you telling that you're the best and you're one of the best. I don't really like to hear that.
Really?
Like to hear that.
I'm sorry. I
No,
said
no,
that
no, no,
really.
no, not that, no,
joking.
because you know, people tend to pump you up, and your ego gets way too big, and then you make mistakes.
Yeah.
So, I started I think I took 800K losses on the stupidest ticker
Really?
next month, and I took I think another 400K loss going to the next month. It was just very bad, and I just keep telling myself that I have to compare to the perfect trader. That's imaginable. No, I would say imaginable perfect trader, and tell myself I'm a trash trader. So,
So did you develop it then,
uh,
after that period, or did you already have it then?
I developed it ever after.
Yeah.
Yeah.
So how did you handle that period though? So what were you feeling, or when you had that huge month, what were you feeling at that time?
I was feeling on top of the world. Bought 2 Koenigseggs at that time.
You were too.